Hello, I'm David Buckland and welcome to this week's Video Insight. Today I'm being accompanied by Damon Ficklin, who's the longest tenured employee at Polen Capital. Polen Capital run a few different strategies, and I just thought we'd kick off today by asking Damon to tell us a bit about the organisation, Damon.
Yeah, no, absolutely. We're a global asset manager. We have about 230 employees at Polen Capital today. We've been growing nicely over the years and anticipate that we'll continue to grow at a nice rate. We have 4 distinct investment franchises. I'm the head of the large company growth team based at our headquarters in Boca Raton, Florida. We also have a small company growth team based in Boston, employing the same philosophy and process to invest in small and mid-cap companies around the globe. An emerging market growth franchise in London and Hong Kong. And then a credit team that's based just outside of Boston in Waltham, Massachusetts. Thanks
very much. And importantly, you guys effectively own and control the business.
We do. So employees own 72% of the firm and control 100% of the firm. We have a couple of passive owners. One, the Polen Family Trust, which is David Polen, the founder's family trust. And then I Am Global Partner that owns a 20% passive interest in the business and helps us extend the brand outside of the United States and in building connection and assets outside of the United States.
And Damon, 8 and 3/4 years ago, you went from being effectively a US big cap business to a global business, and you run that global business, and it's got just coming around for its 8 3/4 year anniversary at the end of September, and it's got a very enviable track record.
So we've, as you mentioned, we've been managing portfolios to this strategy since 1989 for almost 3.5 decades at this point. We've taken that investment philosophy and process and applied that into managing a global growth strategy that's just past 8.5 years. At the end of the day, what we're trying to do is drive mid-teens type returns in the underlying companies in the aggregate portfolio to drive a mid-teens return growth profile for our clients over the long term.
Excellent. Now tell me, investing across the growth spectrum, it's very interesting to me that you have, on one side of the spectrum you have high growth businesses, and on the other side of the spectrum you have growth businesses, but much more reliable growth. Do you want to talk about that investing across the growth spectrum?
Sure, absolutely. It's, as I mentioned, we're trying to drive mid-teens type returns over the long term, supported by underlying mid-teens earnings per share growth within the companies. But there is a spectrum of growth companies, right? We're very happy to own a company like an Amazon or Workday, higher growth businesses. They typically come with higher prices. It's no secret that these are outstanding growth franchises. We're happy to pay a higher price when the underlying fundamentals support it. But we're also happy to own companies at the other end of the spectrum, like a L'Oreal or an Abbott Labs, which might not grow in the mid-teens, certainly not for any extended period of time, but we think they can grind out solid, double-digit, low teens earnings per share growth, total returns over the long term as well. So it's marrying together those different opportunities to drive that outcome at a portfolio level that helps us manage valuation, that helps us manage risk, and ultimately drives a great outcome for the client.
And in terms of context of investing across the growth spectrum, why don't you give me an example? Something like Workday would be a good example, and
sure.
where it fits and what the investment philosophy behind the acquiring Workday was.
Sure.
How did that come into your portfolio?
Absolutely. It's a newer addition to the global growth portfolio over the past 2 quarters, really starting in the second quarter and then continuing into the third quarter of this year. We've built up what is now a 4.5% position within the global growth strategy. It is at the higher end of that growth spectrum, so we believe this business can grow earnings and free cash flow at a 20+% rate for many years to come. And I guess 2 things that kind of kept us at bay up until very recently. One, valuation. It was a little more dearly valued over its historical life. It's been no secret that it's been growing at a very fast pace. Given what unfolded in 2022, valuations across quality growth companies and certainly within the software as a service or SaaS space has come down. So valuation has corrected, and we were able to buy it at about 30 times free cash flow, which we think, again, for a 20% plus grower, we think that's an attractive valuation. We were also waiting for the platform to mature a little bit. So the history, if you don't know about Workday, its primary focus is in human capital management, or HCM. So it has cloud software for human capital management. It wrote software from the ground up, born in the cloud, and as they've scaled that, they've become the leader in that space. We wanted to see it broaden out its platform a little bit. And so what we've seen, they've also written financials cloud platform. So ERP, Enterprise Resource Planning. Financials is a big chunk of that. They've written that software from the ground up. It's taken a little more time for the financials segment of the market to move to the cloud, but that's happening now. And we're seeing Workday's business mature. Companies like Salesforce.com, a leader in cloud, adopt their financials cloud platform. That's a pretty big stamp of approval. Other large corporations as well. So we see that vertical. They have a couple of legs to the stool now, right? Which we think is going to drive really strong growth for the long term. Valuation's reasonable. They're becoming a more global business as well. So it's a great example of just being patient, studying high quality businesses for years. When the ingredients are in place to support a really robust thesis at a fair value, then we're happy to build a position.
Damon, that was fantastic. Ladies and gentlemen, we've been partnering with Polen Capital for approximately 2.5 years now. And when you see how highly credentialed people like Damon Ficklin are, and they have come down every 6 months since we partnered with them, they're very, very keen to come and tell their story in Australia. And Montgomery Investment Management is blessed to have people the quality of Damon and a company like Polen Capital to actually distribute. So that's all we have time for this week. Please continue to follow us on Facebook and Twitter, and thank you very much for your time.